Have you ever felt like your money is losing its value? Well, you're not alone. Inflation is a natural occurrence that happens when the cost of living goes up. But there's no need to feel helpless. There are things you can do to profit from inflation. The best time to invest in inflation is during a period of inflation when the cost of living rises. How to profit from inflation? The best way to profit from inflation is to invest in companies that make products that are affected by it. For example, if your local supermarket has increased prices, you can buy shares in a company that makes food or drink products. You may also want to invest in a company that makes or provides services related to the food industry. If you are not sure whether your investments will be affected by inflation, then it is better to hold cash reserves so that they do not suffer from any losses caused by rising prices. This will help protect your money from any losses caused by rising costs. While it's true that inflation can make your money worth less, it doesn't mean you should give up on investing altogether. In fact, the best time to invest in inflation is right now, when prices are starting to rise. If you do not want to suffer from rising prices, invest in products that will help insulate your earnings. Perhaps seek out real estate or stock-like material that cannot be as easily manufactured by machines. Such an investment may not be susceptible to inflation. There are three main ways to profit from inflation. You can buy an inflation hedge. An inflation hedge is an investment strategy that will gain money as the price of an asset goes up, even if it doesn't go up much. That's because an inflation hedge will be able to lock in a higher rate of return than what you would receive on cash or cash equivalents. You can use options that have a built-in hedge for inflation exposure, such as puts and calls on stocks with high dividend yields. In general, buying puts or calls lets you bet on rising prices without actually putting your money at risk. You can invest in companies that produce goods or services that are highly affected by rising prices. This includes sectors like healthcare and technology, where there are always going to be opportunities for growth at higher prices. The most common way of protecting our money is by investing in inflation-protected securities. These can be certificates of deposit, bonds, and other government bonds. The benefits of these investments are that they are guaranteed by the government and they will not lose value. If the inflation rate goes up, then the value of these securities will also go up. The downside is that they are not liquid, and if you want to sell them in a hurry, then it could be difficult because they might be impossible to sell at the current price. Inflation is a very real risk for investors, and it can make the difference between a gain or loss. Inflation is defined as the increase in price levels due to an increase in money supply, M1. It is measured by the Consumer Price Index, CPI, which is produced by the Bureau of Labor Statistics. The CPI measures price changes for goods and services purchased by consumers, including food and transportation. The price of food also includes grocery store sales taxes. If you want to avoid losing money, make sure you do your research about inflation. The Federal Reserve Board tracks inflation using an index known as the Personal Consumption Expenditures (PCE) deflator. The PCE uses personal income, outlays on goods and services, and prices paid by consumers to calculate annual inflation rates. If you like the video, please comment and subscribe. Thanks for watching.